Hi, I'm Sarah from Kirk Rice, and I'd like to welcome you to our webinar on Making Tax Digital, specifically for income tax self-assessment. So this session aims at individuals affected by the upcoming changes, including landlords and self-employed professionals. So we'll explain what MTD is, who it affects, when it's happening, and how you can prepare. Joining us today, we have three experts from Kirk Rice. We have Hadley Baldock, one of our tax partners, Jonathan Swarbrick, one of our senior managers in outsourcing, and Sarah Godwin from our general practice department as a director. Each brings specialist insights to help you to get ready for making tax digital with confidence. So first of all, we're going to talk about the basics and try to see how we can explain those. So in simple terms, what is MTD for income tax self-assessment, and how does it differ from traditional self-assessment, Hadley?
Right, well, welcome everyone. When we're talking about MTD, that is an abbreviation for Making Tax Digital. It is the government's attempt to haul HMRC and the tax system into the modern era, and it is designed to improve taxpayer experience as much as giving the government more data on everyone's income sources. In simple terms, Making Tax Digital is going to replace self-assessment for any affected taxpayer, and I'll come on to those affected people in a minute. But the current system, of course, is a self-assessment system. So if you are required to be within self-assessment and file tax returns with HMRC, you're filing once a year, and that's generally by the 31st of January following the tax year in question. And that tax return is a declaration of your income and capital gains and other tax relievable expenses and so on and so forth. Making Tax Digital will replace the self-assessment system for landlords, for anyone who's receiving income from property in the UK and from overseas, and also for the self-employed. And by self-employed, we're talking about sole traders, so people working on their own in their own business. In essence, they will be moved out of the self-assessment system and into MTD, the MTD system. And under that system, they will be required to file 4 quarterly updates of their income and expenses from either their self-employed business or their rental property income. In addition to that, they will have to file what is called a final declaration with HMRC by the same filing deadline as for self-assessment, which is the 31st of January after the end of the tax year. And that final declaration will include all the income that has been reported via MTD, so from their self-assessment or from their property income sources, as well as all other sources of income or capital gains that they have made in the tax year.
Great, thank you. So I think that's pretty much covered the basics as to why they've decided to do this and what that involves and who it's likely to affect. But just to go into a little bit more detail, what's the current timeline and the key milestones that clients should be aware of, Hadley?
Right, so MTD is going to take effect from April 2026. So we're not many months off the start of the MTD mandation process. What we're doing at the moment is to get ourselves ready for the big change, because this is a once in a generation change to the tax system. And firstly, we'll be identifying the affected clients. So who's going to be brought into MTD in the first wave? Well, we've got anyone with gross qualifying income of £50,000 or more being mandated to the MTD system from April 2026. Now, what do we mean by gross qualifying income? Well, we're talking about anyone who has income before the deduction of expenses from both self-employment or from UK or overseas property. And we have to combine those totals together to see whether or not they are mandated to Making Tax Digital. If they exceed the £50,000 gross income threshold, then they will be in MTD by law from April 2026. There is a further mandation that happens in April 2027 for anyone who has gross qualifying income from those sources. So that is self-employment, sole trade, or from property income in the UK or overseas. And that will be from April 2027 for anyone with a £30,000 gross income. And then the final mandation group will be those with income from the same sources that exceeds £20,000 gross from April 2028. So it's a 3-year process to get people into MTD.
Great, thank you. So the key question here is, what are the risks, if any, of non-compliance if a client doesn't act on time?
Well, I'll come to the risks in a moment. I think it's worth understanding that this is law. So if you are caught by the rules, then you are required under law to comply with the Making Tax Digital requirements for record keeping and for the actual filing of your quarterly updates and the final declaration. There are some exemptions, and we'll come on to those in a few minutes' time, but most people are going to be required to come into MTD. There are also 1 or 2 groups of people who will be delayed from the £50,000 gross income deadline of April 2026, and that would be people who are non-UK resident with UK rental property income. Currently, the HMRC systems are unable to deal with them for the first wave of MTD reporting, so they will be delayed until April 2027. In terms of the risks of non-compliance, well, it will be, as for any tax compliance, there will be penalties levied by HMRC when you fail to meet the filing deadlines. In the case of MTD, we have a slightly different penalty system, which is a points-based system. I won't go into the detail of that, but essentially every time you miss a quarterly filing deadline, you accrue some penalty points, and after you reach a certain threshold, you are then fined £200 for the late submission. After a while, this penalty points will drop away if you then comply and meet the filing deadlines for subsequent submissions.
Wow, okay, so it could get expensive.
Yep.
Okay, so let's look at responsibilities. John, if you could answer and just let me know what exactly quarterly reporting does actually involve.
So quarterly reporting, as Hadley explained, it's each calendar quarter, and it is fairly simplistic for the quarterly reporting. You don't need to make any accounting adjustments or anything like that. It is just going to be your income, your expenditure, and your overall profit. If you're below the VAT registered threshold, so below 90,000, those literally are the 3 figures you have to do. Much like on a normal self-assessment return, it's just income, costs, profit. If you're above the VAT registration threshold, then you have a bit more detail you have to give on the expenditure. But again, there's no accounting adjustments or tax adjustments in those. And each quarter, it's on a cumulative basis. So rather than it being Q1, so March to June figures on the first quarter, and then just July to September in the second quarter, it's cumulative. So if something's missed out in the June quarter filing, it can go in the September quarter filing. There's no issues with having the incorrect figures in there because it's all built up and then gets sorted out in the final declaration, as Hadley said, at the end of the year when all the accounting adjustments and tax adjustments are made with all the other income, and that's where the final "this is what your tax is due for the year" figure comes from. However, those quarterly filings do need to be made on time, but it's as little as just income, expenditure, and profit.
Okay. So let's just think about what we mean by digital record keeping in practice. So is this something you could do on Excel, or do you need some form of compliance software, John?
Strictly speaking, you can do it on Excel. HMRC have relented and gone, okay, Excel is a digital platform. It's not really in keeping with what they're trying to achieve with MTD, and it does still open up the possibility for human error. The issue with Excel is that you do have to have what's called digital links. So if you had a Excel cash book going through, you'd need to then have formulas to bring all that information into another tab that just did the 3-line or more detailed filing figures that you're going to need to file with HMRC. And then that would then need to be able to be submitted to HMRC. Now you can get what's called an API enabled Excel. They're quite rare and quite expensive. But in most practices, in most situations, if you are using Excel, you'd use something called bridging software, which essentially pulls that information out of the relevant cells in your Excel and then files with HMRC. Obviously, it's not ideal to have it in Excel. There's a lot of things that go wrong, and so it is much more practical, and there are a lot more benefits when you use an actual software. And the sort of compliance softwares we're talking about are, well, most of the major cloud suppliers, which have what are called APIs, which integrate directly to HMRC, which means once the bookkeeping's in there and it's all in the right place, you can press a button and the figures go over to HMRC seamlessly, and you can see live in the systems what's gone over and what it's calculated your estimate for tax to be on that basis. Obviously, it's not going to include everything because there's certain things that aren't in your quarterly submissions, such as capital gains or interest, dividends, those sort of things, which won't get captured.
Okay, thank you. Over to you now, Sarah. So what's the day-to-day going to look like for clients once it's live? How different is it going to be from what they're currently doing?
Okay, so I think at the moment, obviously, your aim is to collate all of the information and provide it to your accountant on an annual basis. So there is the need to not necessarily be doing it on a regular basis, and that maybe life gets in the way and it becomes a bit more of a chore towards the end. But obviously going forward, your day-to-day is going to look a little more like this is going to be something you're going to have to make time to do on a regular basis. Obviously, this is now quarterly, so it will be pulling the information together on a quarterly basis, and then ensuring that that's then met the deadline of the submission that needs to be done by the 7th of the following month of the quarter end. So it's just going to be getting more into doing this on a more regular basis, which hopefully isn't going to cause too many more problems. It's just hopefully something that will become more sort of norm, and hopefully addresses any looking for information, finding paperwork, etc., and stops that large, heavy effort at the end.
Yeah, in some ways it's easier just to keep on top of it as you go along, isn't it? So maybe this is going to force everybody to do that.
Yeah.
So is this something that I can just get my accountant to do?
Definitely. Yeah, it's something that we will be able to support you with. We will be able to assist with the bookkeeping and the quarterly returns. So yeah, definitely something that we can have discussions with our clients and any prospective clients about how much support you would like from us.
Right. Okay. But if I do get you to submit my self-assessment tax return, what will my responsibilities be and tasks?
Okay, so if we're normally preparing your personal tax return on an annual basis, you would be responsible for ensuring that we have all of the information by the adequate deadline that we will explain to clients as we are sending out the information about how we're going to carry on doing the process. And then obviously it's about turning those quarterly returns around as quick as possible, and then working with us to ensure that we can get the final declaration done with the remaining information that you would normally supply as part of your self-assessment.
Okay, thank you. So, John, you spoke a little bit about the digital record keeping and the benefits of using a software instead of Excel. Is there any particular software that you would recommend?
It depends on the situation of the client. So there are some that would work better for some clients than others. For example, I mean, the top 3 cloud softwares out there at the moment that are sort of leading the way with MTD for ITSA are Xero, QuickBooks, Free Agent. Now for Free Agent, if the client has a NatWest, Metal, Bank of Ulster, or a small other bank account, they're all owned by the same overarching bank. If they've got a business bank account with one of those banks, they get Free Agent for free. So in those cases, it's kind of a no-brainer. You get that account software for free with that business account. You might as well use it, and in 90% of cases, it would be perfectly reasonable to use it and good for the purposes of bookkeeping and all the filings that need to be done. They do have a landlord-specific piece of software, which gives a lot more functionality for landlords, which you don't get in the other ones which don't have specific landlord functionality. However, if you don't have that bank account, that one is a bit more expensive. QuickBooks and Xero are mostly similar, and they're just like, there's little itty bitty bits that are different between them, which some things are better for some clients, some things are better for clients than the other one. So it would be a case of we'd be able to discuss with the client what their situation is, what sort of income they have, what their needs are. They need multi-currency, do they need all these sort of things, and we would then be able to advise which one would actually be the best fit for them.
Okay, great. So if I'm a self-employed landlord, you can actually help me to come to the conclusion of which the best piece of software is for me. Okay. Yeah. So what are Kirk Rice going to do to help our clients prepare and to comply with the MTD and income tax self-assessment? Hadley?
Well, we've already begun the process. So on our website, we've created an MTD hub. The contents of that include specific guidance for the self-employed. And by self-employed, we're talking about sole traders, so not limited company directors or those in partnership. And it's quite important that people understand that we are talking about sole trade self-employed individuals, as well as those with property income from the UK and overseas. So the MTD Hub has that information on there. There is some information regarding the requirements, the filing deadlines that have to be met, and we've got a question and answer, sort of frequently asked questions section as well, that goes into a little bit more detail. That also sets out those people who will be automatically exempt from MTD. It's quite a long list, although it's going to, I mean, the main sort of people to highlight, and there are groups of people to highlight, are foster carers, as I say, limited company directors, partners of partnerships and LLPs, estates and administration, trusts, non-resident companies, charitable trusts, non-registered pension schemes, ministers of religion, and so on and so forth. So there are groups of people who are not yet caught by making tax digital. The other thing we have done is to engage directly with the clients that we believe are going to be affected by the first wave of mandation. So that's those with £50,000 or more of gross qualifying income from those sources that I've already mentioned. We will be looking to engage further with those clients for the first wave, and then subsequent waves of clients for the £30,000 and the £20,000 thresholds we will engage with in a year or so's time. At the moment, we are still trying to get to grips with the rules. there are lots and lots of rules that have to be looked at. HMRC are running a pilot, so it's a testing scheme that we will be pulling 1 or 2 clients in just to help us as a business understand how MTD operates in practice, and out of that we will be able to then come to each of our clients with a proposal for the services we can offer and the price of those services. So the profession as a whole is spending the next few months testing the process with HMRC under the pilot and working out what services look like and how we price those up. Of course, we will also be training up our teams to help with clients that wish for us to undertake this work. I would say, and I'm not sure whether John covered this, but it is possible for a client to file their own quarterly updates, maintain their own digital records. It may well be onerous to begin with, but after time, I would hope that might become more familiar and you might become more confident with that process. But it's not for everyone. So we do recognise that some people don't have the time to do that sort of work, or they don't have the inclination, or necessarily the confidence when it comes to maintaining digital record keeping. So we're there to step in and help with that.
Brilliant. So we've talked a little bit, John, about how we can help our clients and prospective clients to make this as simple and stress-free as possible by using technology. But it may be useful for clients to understand what, if any, upsides there are to them by being forced down this road of making tax digital.
Yeah. So I mean, I'll just loop back to something Hadley said. You can submit it yourself. You would need your own HMRC gateway logon, which you need to set up, because it's essentially using that logon that does the filing that we spoke through before about the API. If we were doing it, it'd be through our agent one. So upsides of keeping it essentially in real time, knowing how your self-employed business or your rental properties are doing live, it gives you better visibility. You can see essentially main benefit is planning. By doing it in real time and having these quarterly updates and getting that gives you a better expectation of what your tax liability is going to be, rather than under the current system where maybe you hand over your tax records to Hadley and his team in the tax department in December or early January, and you don't know what your tax liability is going to be until about a week, 2 weeks ahead of the time when you actually have to pay it. And that might come as a shock if you've suddenly had a much better year than you thought you were going to. This way, you're keeping live, you know how well you're doing, and then by the end of April, you should have a fairly good idea what your tax liability is going to be for your self-employed or rental property income. And then if you haven't got that saved away, it gives you a chance to save it away, because the deadlines for payment aren't changing yet. That might be what HMRC are planning to get to in the end. Some cynical people would say that is, but at the moment the payment deadlines are staying the same. So knowing much more ahead of time what your liability is gives you the opportunity to plan, gives you the opportunity to save money away, or earlier in the tax year, if it looks like it's going to be high, talk to the tax guys and go, okay, what can I do to bring down my tax liability? What sort of things can I do to plan and improve what my tax position is going to be at the end of the tax year? Because waiting until it's already happened is a bit too late.
All very true. Yeah. So Sarah, what would you say to clients who view MTD as just another administrative burden?
I think, unfortunately, as Hadley's mentioned, it is law, so there's no getting away from it. But I think it's trying to flip it on its head and to look at it and see the positives for it. That, as John's mentioned, all of the planning that you can do around it, how you can actually track how your business is going on a more real-time basis. Actually, you'd be doing the information gathering anyway. It's just doing it a little by little at a quarterly point rather than doing it all in an annual chunk at the end. So it's not really asking for anything additional, it's just making it at particular points throughout the year rather than just all in one go.
In some ways you could see it's less of a burden, it's just a drip feed rather than a massive job at the end, to be fair.
Yep.
So okay, so if I was to ask you, Sarah, what would be the 3 things that I should do now to get ready for Making Tax Digital? What would they be?
So I think ultimately, as you can see, going down the route of the accounting systems and tracking all of this, if you don't have a dedicated business bank account for each of your sources of income, whether it's your sole trade or your rental properties, I suggest you go and set up a particular business account solely for that, so that it's not going through your main personal account. This way, then you can keep the transactions separate and you've got less to be going through and analysing. You can focus solely on the business activity. The second thing would be for you to decide how you want to track the accounting transactions. Do you want to, which particular package you would like to use, which one fits best with your situation? And then finally, making that decision about whether you would like us to step in and to take this process over for you, or whether you would like to do the accounting yourself. And we can provide training for that if that's something that you would be interested in doing.
Thank you, Sarah. They're all great suggestions. So, John, it's been a while since they launched Making Tax Digital for VAT. How are we applying what we've learned from that to Making Tax Digital for income tax self-assessment?
Yeah, it's a good question. Obviously, Making Tax Digital for VAT came in quite a while ago, and that was the first tranche of HMRC's plan to essentially digitise all the taxes. So that came first. Income tax finally is coming in. It has been kicked down the road a few times, and further down the road they will be bringing in those partnerships, those LLPs, those corporations at some point. The lessons we've learnt, it's get sorted now, get yourself on a system. We already know how the systems work because we've had to learn them for Entity for VAT, and we're quite knowledgeable on the Xero, the QuickBooks, all those ones that work. And we've learned that how HMRC implement these things. They tend, getting in that pilot is good because it gives you a chance to get used to the process, understand how it all works, work out those kinks for both us, you as clients, and HMRC. At the moment, the pilot is not as open as we would like it to be. There are certain ones that HMRC systems and the software systems aren't quite ready for, but they will be coming along. And just knowing that it's coming, there's not a lot you can do about it. At the moment, it's just those who have the turnover over 50,000 coming down, as Hadley said, to 30 and then 20. Based on what we've seen with MTD for that, I wouldn't be surprised if then after that, maybe give it a year, maybe 2, everyone who is within MTD for it's with self-employed or property income is going to get caught. They're going to just mandate it for everyone. And so planning and getting ready now, so you're not caught out later, is the main thing we've applied.
Okay, so you touched a little bit about what further developments and expansions they're likely to be to the MTD framework. John, is there anything you'd like to say to elaborate on that, Hadley?
I think just be aware that this is something that has been brewing for quite a long time. I mean, it was George Osborne who originally said that, when he was Chancellor, who originally said that the self-assessment tax return as we knew it was coming to an end. And it has taken an awfully long time to get to this stage. But it is progress. HMRC systems are having to change. They're having to respond to external threats. And there is a need to improve the taxpayer experience, as well as the data gathering that HMRC need to ensure a robust tax system. The whole idea of MTD is to also help reduce the tax gap and to reduce human error. So the digital record keeping is key to this process. I think we've just got to come to terms with this. We need to engage with the process. Don't stick your head in the sand, because it will come up and you'll be bitten by it if you don't engage early. Please be aware that any professional firm or person that you engage to help with this sort of work is also learning it for the first time. So bear with us as we are getting used to the new rules and the new systems. We are intending to help and to try and make your lives that little bit easier. And, you know, we do recognise that it is a new burden upon us all, but it is necessary for dragging HMRC into this current century. We, as your agent and accountant and tax advisor, will of course be working closely with you for the final declaration, which is the last point of the whole process. That shouldn't be vastly different from the normal tax return process that we're currently going through. So we know what we're doing with that. There are one or two nuances to it that we will have to get our heads around, but rest assured we're here to help and to take the burden of that from you.
Okay, that's brilliant. So there's been an awful lot of information included in here. So if, as a result of this, any of our clients or listeners, prospective clients, have any questions that they'd like or specific support to do with MTD, how should they go about finding out more?
So look at our website as a first port of call, because there's a lot of information on there and you can go through it in your own time, at your own speed. We will be getting in touch with all those clients that we believe are affected by the first wave of mandations. So that's people with £50,000 or more of gross qualifying income from their self-employment and or their rental property income. So we will be making a move on that. Please give us a little bit of time, because we need to work out who within each team is going to be undertaking this work. We're going to be looking at the market sources of tax compliance software and trying to make recommendations to each of our clients. I just want to add one more thing about the mandation. HMRC have already started sending letters out to clients that they believe will be affected, but the actual trigger point is the 2024-25 tax return. So we are currently using data from the 23-24 tax return to try and identify clients that we think may be affected by the first wave. But in reality, it'll be the 24-25 tax return that we're currently working on for our clients that will determine whether or not they are brought into MTD. Once you're in for 3 years at least. So there's a 3-year lock-in, and that will mean that even if your income in the future dips below the £50,000, then you have to go through 3 years worth of MTD filings before you can come out. And that's just to ensure that any sort of variations in income don't sort of skew the figures or anything. It just ensures a smoother process for HMRC as much as it does for the client. But we're here to help. We're here to walk you through the process, and we will be in touch when we know a little bit more.
So I'm also thinking possibly what could be helpful is the people we are going to be doing self-assessments for the 24-25 tax year, not to leave it to January to get that information over to us. because the earlier we have that information, the earlier we can start to see whether or not they will be falling within that bracket for making tax digital.
Absolutely.
So the sooner the better, and then they can obviously, as a team, be on top of that as early as possible to support and help you. So thank you very much, team of experts, for helping us answer all these questions today. Do get in touch. There's also the info@kirkrice.co.uk email address if you do have any specific questions you'd like to send, and we can field those to the appropriate person in the team.